The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to take your calls. And even more importantly, we have right now a Dow that after all the news with Greece and then the jobs report that came out, it's 225K, kind of look not bad actually. So what happens? The Dow continues so far, days young, for the third consecutive up session after that smash on Tuesday, because we've now gone above the candle, that ugly red candle of Tuesday, which opened at 12,958. Today's high is really important. Today's high is 12,968. So let's go through the numbers. There's a ton of it, emails and questions to ask. And also, I believe today we're starting off with Tiger TV. I am now on Tiger TV Channel 11. So when you want to archive, just go to that. You'll be able to see these particular charts that I'm talking about. You'll learn about the ChapmanWave. You'll understand. Just one visual will give you so much that I've got that I have to spend words and words and words to explain. Like what is a peak and what is a trough? One look and you know what a peak and what a trough is. Now let's just get to our nitty-gritties. The Dow is up 52 at 12,960. The S&P is up 8 at 1374. The comp index is up 19 at 2989. Gold is up 11 at 1710. Silver's up at 43 cents at 34.22. Platinum is up nicely at up 7 at 1670. Now this is really important. Copper has come back and it's up 6.6 at 3.85. Man, that is important. Crude oil, I'm going to talk about that in a moment. I think crude oil is going higher. I had a question from one of our subscribers. Could I discuss it? Sure, absolutely, very important. Bonds are down 19-30 seconds, and I'm going to discuss this is really, when I say it's an important week, it means it's an important week. I always say that. I always say this is going to be an important week. But this is an important week because we've got absolutely specific levels to watch that are very, very important. Now, let's go to what I have to start off with. First of all, the Dow. Now, my subscribers to my opening call know exactly what we're looking for every single day. We assess where we are in the Dow, what the chart pattern is. Remember last week I was talking about, I said, I keep hearing over and over from people just everywhere, CNBC, reading it, whatever, that the ascending triangle, the rule that they're talking about is that the ascending triangle will come all the way back to the start of the triangle. That's the base. And I say, where are they? What do they not, have they not traded that kind of pattern before? No. The most likely, not that it can't happen, sure it can, but the most likely thing to happen is that what we get is a cup formation. You remember I said, it reminds me, it's like the Statue of Liberty. I don't know why I think Statue of Liberty, but you know, holding the torch. So you've got the head and then you've got this arm that comes back and the torch comes back towards above shoulder level. Very important. Why? Because to break the pattern of a double top, and that is a possibility because you see, we are becoming overbought in many ways. But the rotational market, and I'm going to emphasize this over and over as I have, everyone's talking about this being the anniversary of the bull market. Not for us. March the 6th is where we bought the Dow Diamonds at about 66. About 150 or so points off the low, and we held that all the way through to about 89. Actually went high, then we got stopped out, and then what we did in my opening call to take the place of the diamonds, which were a little pricey for many people, I said we're going to choose the best low price stock to use as a proxy. So in December, I think the 4th, we got General Electric. So the rotation means, and that's really important to me, the rotation means that we are in fact able to look at other sectors possibly the way we had over the last 2-3 days, such huge percentage moves in certain small cap stocks and in the building and the construction area is so important. If you miss that, you've missed the same point that you're missing if you didn't know that a rising wedge at the apex culminates very often with a pullback, and because the power of the waves, the tide is so strong, some of the waves are there and enough to get you back towards, to, or above the previous high, in this case for the Dow, 13,055 made on the 29th of February. So that's why I'm saying this is an important week. Where we close today is going to be really important because it sets up what can happen next week. Now, let's do this. So for those of you who are new to my charts, let me quickly go around. I'll show you my opening call, what my subscribers look at every single day. In these 5 sectors. Now, why have I got something different here? A, B, oh, that wasn't B. 1660, you must never miss a peak, even by 1 penny, because it can put you off. This is leg C in the 120-minute chart. It should theoretically take us to a leg D. That's the prerequisite of the ChapmanWave buy mode. It doesn't have to go to the previous high, and normally I would call these gray, letter A, gray B, gray C. Why? Because it's still very much under the 13,055 previous peak F high. I'll discuss that as we move along. Now that you've got Tiger TV, channel 11 to be able to go to review these charts and my methodology. So this shows the 120-minute chart. This shows the VIX, the volatility index. Remember, I said it's not about the dollar. I've been saying this for at least since the volatility index was up in the high 30s. I said when the volatility index goes below 28, we're going to have the chance to see the Dow get to the 12,500s or so. And that's kind of what happened. Now we're making a bigger emphasis that as long as the volatility index remains below 18, it allows for another push to the upside. We will see a change in trend if that volatility index starts to break into the 23-24 area at any point over the next week. Got that covered. That's my short-term volatility index. Then the ChapmanWave, this you'll learn over a period of time. This is my ChapmanWave trend gauge. It's actually Richard Arm's trend index, but I use it in a completely different way, as I do most of the indexes, that technical tools. And I have specifics, and that high of 2.92, I say to subscribers, this is where we should get a counter-trend rally, because that's the history of this particular chart formation. And so now we've got that. It's very important that there's another pattern. You see that falling axe, the declining wedge, the expanding, declining wedge, all those words. These two trend lines, one going down, the other going down much sharper. You break and close above that significantly, you can have a measured move to the upside. You pull back and you can have that pattern I call the dreaded H. So that's why I'm saying the close today is very important. But look how the S&P is broken out so nicely. So the S&P previous high was 1378. 1378 something, and look, today we're at 1374.76, really close. When you get that close to a previous high, you have to watch it very closely, because in fact you could be going for that magnetic retest of the previous high. Done with all these charts. Now let's go to something else. So I was asked about the Qs and the IWM. I'll certainly go to that. So the Qs have held beautifully, and they've gone to a new 65.08. By 1 penny, they've gone to a new recovery high. That sets up a V shape, perhaps a double top or a breakout. That's why I'm saying this is such an important phase. The weekly chart is extended now by 1 penny to leg D continuing. The monthly chart is just spectacular. It is really just spectacular. It's a new recovery highs, not all-time highs. That was way up in the, I'm not going to go where it was. That was way up in the February 2000. That was way up in the 120.50 March of 2000. So this is just a great recovery. Now let's look at this. In the IWM, the reason why I'm looking at the IWM is that so many of these small caps, and I have a list on my Traders Corner for my subscribers of stocks that we've been looking at that are just really exciting. And those stocks are powering higher. I must look at this. I did all the study and everything. We missed by 1 penny buying SWHC. Smith & Wesson, again, we've had a great profit before. I tried to get back into it. We missed by 1 penny. 538 was the low on the 7th. I wanted 537. And look what happened. Today it hit $7.09. So we missed some. It's upsetting. But you know what? It's the technique that is so viable, that you've got the ChapmanWave technique. Now let's go to Freeman in Dallas, because he wants to talk about a stock that was also on my list. Hi, Freeman. How are you?
Hey, by the way, I did get into that Smith & Wesson, and I'm trying to use the principal from there to buy into Ariad. I did get in at 538.
Oh, fantastic! I'm so thrilled. You know, I did get some emails from some subscribers who got in, and I think that that's fantastic. Now, you have to appreciate that it's in the 120-minute chart. Smith & Wesson is up in leg E, so you can get a pullback because this is both a news-related event, and it's a pop-up on a Friday to leg D. I'm calling it D for this moment in the daily and leg D in the weekly. So there should be some kind of a consolidation. But the monthly chart is this has to be one of the most spectacular monthly charts I've ever seen. It's gone from 2280 back in August of 2007 right down to the low in October of 08. To 1.53, and then the most recent low was 2.29. We did get that first move, got out of it, weren't able to get back in, and this is almost trying to test the $7.52 high of May of 2009. This is a leg A this in percentage terms from 229 to today's high of 7. That is one single leg up is amazing. So now you want to look at another favorite of mine, Aria. Aria is a symbol, and it is called Ariad Pharmaceuticals. This is very interesting. It's made an alternate wave leg C, probably peak C if it doesn't make a new high in the monthly. It's at 14.93. Folks, if you're new to the Tiger TV 11, when you look at this, you'll get used to my charts. What I do is this one on the right is the monthly, the one on the left is the weekly, the one over here is the daily, and when I pull this one up here, it'll be the 120, and you can see there's a particular moving average in the 120-minute chart that is just so important. It's the 200-period moving average. Look how it's bounced off that. Now let's do are you in it already?
No, I'm not. I'm trying to I was waiting for a pullback to get into it.
This is a very critical level for it. Why? Because there's a technique that I talk about, which is the ChapmanWave restart. It means that sometimes you go to a leg A and then you fail, or leg B and then fail. Well, this has done that a few times. What I'm suspecting is that if the stochastic, which is at 41%, can move higher with the price going to, you know what, this is a great one to talk about because there are a lot of stocks that look a lot like this. Let's talk about it, and I'll be right back with you, Freeman, in Dallas. We'll be looking at Aria, which is trading at $14.91, up 6 cents. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to take your calls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investment Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. We're back. The Dow is up 50, S&P's up 818, and we're on right now with Freeman in Dallas, and Rick may have just dropped off, ready to go on the phone. Here we go. Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and what we're looking at is with Freeman in Dallas, we're looking at, he wanted to know about Aria, whether he could start a small position. I'm going to make a suggestion because this is so far the tacticals are saying that we've had 3 rally attempts in the 120-minute chart from lower lows. This is the one that has the technicals with the stochastic at 78%. Possibly, if it's able to break above 15.14, maybe go to 15.16, the high of today yesterday at 11 o'clock, that would be starting to get the stochastic back to the let's see that, yeah, back to the 80% level. So what I'd be looking at now is in the 120-minute chart, just doing a little juggling here, folks. Just had some intermittent problem here. Just trying to resolve it. Yeah, so this is what I'm doing. When we are looking at the potential for the upside and the potential for the downside, the weight of evidence says, as you know, Freeman, when we're looking at the charts, I want to know, are we making higher highs and higher lows? That's just the easiest way to do this. Or are we making lower highs and lower lows? Higher highs and higher lows means that you're in an up channel or an uptrend. On the other side, you're in a down mode. That's why when I go to the TLT, I'm just jumping to this because I want to show chart patterns. That's what I'm all about. The TLT has been in a down mode for a long time. It just can't break. And that's very important. That's another thing that I'm going to talk about in a few moments. Why are bonds so weak? Is it telling us that, in fact, stocks are strong? Is it telling us that some of these small caps that have not participated in this last move are perhaps getting ready, or the ones that have been just dull for a long time? That's why I'm saying that the close today, Friday, is very important. Now, the other thing is on a weekly chart, this made a peak F top, the sixth highest peak, at 13.50 back on the July of last year, and then it pulled back half, 50% retracement to $7.55 in 3 months. Weeks, in 3-4 weeks. This pattern looks very different, but it has gone to, I have to at this point call it a peak F top. 1 penny above it, and I can start to rename it to a new leg B, above 15.98. Here's my recommendation. I'm going to say, because I know you watch these things very closely, you can see that the market was rallying sharply, and now the Dow, at least, and the S&P are pulling back somewhat. I'm going to ask you to have a little patience. You could, in fact, just nibble on it right now at $14.90. I probably would say to you, I'd sacrifice a little bit on the upside by having the patience to see if it can hold 1475, which is the 9-period exponential moving average. Now, for all we know, it gaps up on Monday or it pulls back. So I'm going to say to you, unless by the end of the day it starts to rally again and it can get above $15, it's at $14.89 right now, that's 12, 13 cents that you miss. But the potential is, if you're buying into strength, it's going to break at some point, like Monday or Tuesday. It'll break 15.14 for a new leg B. It has not had a leg B since the peak D top back on the 6th of February. So to make it real simple, I'm saying to you, have a little patience. You might have to wait until Monday. Maybe we can look at it again on Monday, just in case this market is going to start pulling back, because, as I said, this is a really critical day. We've got the cup formation. It doesn't have to fulfill the cup formation, but it has to arch around to be able to look like it's wanting to retest the previous high. S&P is the same sort of thing. So that's what I want to look at. I'm going to say to you, hold off a little bit. But if you want, you can start maybe, if you're going to buy like a small position now, make it a little bit smaller so you at least you have your foot in the door. But that one should have a wider stop of about $14.14. Give it a little room. So that's my recommendation. Hope that helps you. So now let's look at the so that's ARIA. That's Ariad Pharmaceuticals. Now, I said that I would go to the IWM. Now look at this. This is really quite important. The IWM has rallied all the way to a high today of 82 round number. But it is the weekly charts, and I'm going to move to the weekly charts now to show you how important your longer-term time frame must be. Oh, is that the music? Yep, that's the music. Well, in the IWM, the support is tremendous because the stochastics at 91% and the MACD is still very positive. I'll talk about that. I'll talk about crude oil. I'll talk about the volatility index. We'll be back straight after this break. Basil Chapman, Dow's up 38, S&P's up 7.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. So the IWM was doing this very retracement. We've got to look at the 82 round number. It needs to break it by the end of the day. Otherwise, that could become some kind of a resistance point. Now, you remember I spoken about the volatility index, and that volatility index I was asked in the den if I would look at it. Well, from the April 2011 1427 low, it made a move up to a peak D. This is the prerequisite of the ChapmanWave buy mode goes to at least a D. That 48 round number pulls back, tries to retest at 46.88 back in October of 2011, and then comes all the way down, trough A, B, C, D, E, F. And what I had said is this week, in fact, the week of the 9th of, I had said this weeks and weeks ago, that was the week that we either should try to get back into the low teens, maybe even to below 15. That's going to be really key. If it holds there, we've got to be careful. Now, look at this real quickly, and then we're going to go back to our callers. We've got here in the volatility index, in the monthly, look at this. There was a period, and I mentioned this over and over on air, during the 2004, 2005, 2006, into 2007, that the volatility index low in the teens was not an aberration. It was telling us that there was an upside bias to the market. As soon as it broke out into the 20s, that changed. Now look what's happened. When it gets to the 15.17, when it gets into the 15s or the 14s, that's when you start to, it's like a magnet. It wants to draw it in. but then it does turn into a propellant. That's the reason why in my time price, left side, right side time price match, I've got to watch this really closely. This is a period where we could, because we've made a short-term top in the Dow, we've got to watch this real closely. But now the VIX is at -1 at 16.91. Bonds are not rallying. I'm not interested in the dollar. I'm interested in the volatility index. And this VIX says to me, got to watch it real closely. If on Monday, for whatever reason, we come in Monday night, Sunday night, there's whatever it is, and there's a huge -15 in the futures, then you can expect the volatility index to get to the 1950-20 area. Let's go to our next caller. We've got Mark in Massachusetts. Hi, Mark. How are you?
I'm fine. How you doing? Happy Friday.
And a happy Friday to you. Oh, Friday. Wow. That was quick. Yes, happy Friday to you.
I want to look at the financials, the XLF. What's your sense of them?
I love it. I think they're acting so well. In fact, when I spoke of sectors before, that if this is a market where you can be short and you can be long. I personally, the bias, because the bias right now, I think, up until today has been towards the long side. Maybe it starts to change in the sectors, in the very overbought stocks that are making new highs, but maybe the restaurant stock, maybe there's a certain sector that's going to start to get really weak. Until the automotive parts area gets weak, I don't think we can call it over for this market at all. So when I look at the sectors, I say, home builders, one of our home building stock here is up huge on the day. In the single leg A up. ITB, which is what we wanted to buy, which is the home construction, is up huge. And the financials, these are the sectors that just got smashed over the last 3-4 years. And they're the ones that are really doing well. If the XLF, the S&P Select Financial Spider Fund, goes to $14.98,
okay,
all of a sudden, today's high was $14.97. All of a sudden, I have no choice but to call that new leg C, not G. And you've got the MACD potentially starting to turn up. It hasn't crossed positive yet. So technically, when I think we spoke about this, when the technicals are falling, but it's like a balloon with hot air. So the balloon holds up, the air dissipates. So you expect the balloon to pull back. Instead, what happens is the balloon holds up. Well, when the air comes back again, will the balloon go to new highs, or will it just stay there? And then you're kind of vulnerable on the next pullback of the technicals, because this time the balloon is now perhaps a little weaker. So that's what we're looking at here. So we deflected lower in the MACD. For those of you looking at Tiger TV, I'll make it a little bit bigger so that you can see it. You see that yellow line in this particular moving average here? The red one is the 9-period differential of the MACD, the moving average convergence divergence. And the yellow is the fast moving average, and it deflected lower. And you went from this peak, which I did call peak F, all the way down. I shouldn't say all the way down. It was only from 14.97 to 14.40, 50 cents. Not a big deal. Now look what's happened. We're within pennies of making a new recovery high. But the stochastics made a nice V-shaped turnaround. When you see that pattern, it's like earlier on, back in 19th of December. That's kind of what happened to the 19th, but from a lower level. So this is that's why I'm saying it's really an important close that we're looking at today. Because if by the end of the day, the XLF makes 1 penny higher, you've extended the weekly to leg C, you've made the MACD continue higher. The stochastics at 95%. There's nothing negative. My on-balance volume isn't close to a major sell signal. I love what's going on. I'm only upset that I've been so focused on some other things. They've done okay, but I'm looking at other things. But the XLF is really the place. So you've spoken about that, and we've looked at Bank of America. And Bank of America today is also, this is the weekly charts holding the 9-period exponential moving average. Nice action today, but it's a little bit weaker than the XLF. So if Bank of America can break above 835 in the next 5 sessions, that will be really good. And that starts leg B up for the first time in the weekly chart. It's had one leg B up, a tiny little thing back in October of last year. But otherwise, it always fails at A. It makes an A and then fails. And the MACD is good, and the stochastic, different to last time in November, this time the stochastic in the weekly chart is holding at 90%, and then you've got the monthly chart, so that, like, the XLF is in leg A to the upside, the start of a potential buy mode. That is very important, and it's above the 9-period exponential moving average, but the month has to finish. March has to finish, and it needs to close above 1420. So do you have a position, right?
No, I'm thinking about what going into it, or maybe not going into it, or maybe I just don't know.
Oh, you don't know? Okay. I'm going to make a suggestion, and this suggestion, don't dive in. Just think about the way I'm talking to you about it.
Okay.
Because it makes a difference if we make that 1 penny higher in the Chapman wave. I would say to you, if you can start just a small position, and that small position, now, because it's a small position, you can have a stop of 60 cents on that small position.
Okay.
If you were going in deeper, I'd say, no way. But this is just a start of a little position. And what you want to do is we want to watch it closely, because the 120-minute chart is in leg. That made a peak, C1. Yep, that made a peak. Oh, folks, if you're new to the Chapman wave, have a look at every one of the charts that I show, especially in the 120-minute chart. Count how many times. You can use any technique you want, but you count how many times this gets you to A, B. We're in leg C, potential peak D. This should go to a D. So if that's going to be the case, I'm going to say to you, start a small position here. If it breaks away on Monday, that's fine, because you're in the position, and then you can take the time to say, okay, now when it pulls back, I know that the tide is on the upside for the weekly and the daily. Monthly is a little question, yet that could change. And then you can add to it on a pullback to the 1490 to the 1470 area. So I hope that helps you.
Okay, yeah, but it does. What's your take on Apple? Is Apple ever going to correct, or is Apple forever going to be?
That's a really easy answer. Apple will correct. I'm not telling you when, but Apple will correct. Now, you know how I talk about these double tops? I'll tell you, that's the reason why I'm saying this week is very important. Apple made a high of 548.21 on the 1st of March. It then pulled back under the 9-period exponential moving average. Folks, if you're new to my work on Tiger TV, channel 11, you'll see that from the moment it broke out, when Apple broke out on the 23rd of January, not once did it close. It only once touched this white line, the 9-period exponential moving average, and only once did it close under it, and it was so embarrassed that it had to close at the end of the day right on the line, fractionally under it, and the next day it had to close fractionally above it, but it refused to close underneath it. I can actually say to you that Apple, technically, I don't even think it closed on the 6th of March underneath the 9 EMA. So, but that's the shot across the bow. This is now you've got to be a little bit careful. So, and today Apple made a high of 547.74. So it's a 1 point underneath. It's a little less than 3/4 of a point less than the previous high. The technicals are much weaker now than it was at that particular point. So the daily says, unless Apple can close in the 550s, and it has to do it by about Tuesday, there's a chance, especially based on my work on the 120-minute chart, that says if you do not break above the previous high of 548.21, this is what I'm talking about, the rotational correction. We could start to see an Apple and some of the big winners on the upside start to pull back next week, and the construction and the home builders and the financials only have a very mild pullback, an opportunity to get in. So Apple's saying to me that the stochastic's at 92%. I don't want to do anything right now. I'd probably say to you, hey, if you want a choice of buying a put or a call at this particular point, probably for the month of for next week's option expiration, maybe they're going to close it at about 535 or something like that. So I'd probably choose a put rather than a call. But I don't have the signal yet. I might at the end of the day or tomorrow. Now look at this. This is really important. If you look at the weekly chart is in leg E after a very quick peak D. That always says to me, be a little bit careful here, because my on-balance volume in both the daily and the weekly is get the green line, folks. For those of you new to my work, that green line's on balance volume. It's getting a little bit tired, not a little tired, it's getting a little tired in the daily because it's making a double top. But the weekly chart is still very strong. And the MACD is expanding. All I would say to you is, if there is a pullback, because if you look at the gold chart, the up channel breakout, when gold, the GLD went to, what is it, 158, I think, then pulled back into the up channel, then broke out of it again to the upside. All that I can expect on an absolute worst-case basis over the next month and a half is that Apple, if it breaks, it goes down to the 420 to 405 area, and then it tries to bounce right back to 493. So it would be a short-term trade, and my monthly chart hasn't got any signal yet other than to say it's leg D. So the answer is, I believe that Apple will give some kind of a pullback. I'm watching to see if there's a double top, a V-shaped double top, but if there's a V-shaped breakout to the 550s, I would not even think of shorting just yet.
Okay,
Hope
great.
that helps you.
It does. Thank you. You have a great weekend.
And you too. Thank you so much for calling, Mark. Always appreciate it.
Bye-bye.
Bye-bye. Now, folks, let's do this because I had mentioned for one of my subscribers, wanted to know about crude oil. I'm going to go to the USO. Now, I'm kind of upset with myself because yesterday and the day before, we had a great trade last Friday. Or was it Friday, Monday, I'm not sure, on the UCO, which is 200% long, and then we allowed to pull back a little bit too much because I was expecting the peak D to be made. So we still made money, but not nearly as much as it would have been intraday. Now, the USO, which is the United States Oil Fund, this is very good action because after the type of pullback it had, both in the rogue wave in the 120-minute chart, they went on the first to 42.30 and then the pullback to a lower low. What should have happened is that yesterday should have stalled with a doji, and today we should be down. That's saying to me that if you look at the CLJ, I'm going to the April, and if people are trading, I don't trade crude oil, the April contract, this is what I call a gray A. But what's most important is that we've got a peak C being made probably this week in the weekly chart, and the stochastics at 86%. That's good, and the MACD is still expanding. Now, that says if there's anything over the weekend, we could come in on Monday and crude oil could be starting to go to the 110.56 level. At 110.56, or at least starting, I mean that Monday, Tuesday, Wednesday, we could have a pop-up to new highs to leg D. So what would make crude oil change its pattern? If there's a pullback by the end of the day and Monday, instead of gapping a little bit up, it actually gaps down and then holds down. And the dollar, this is a relationship that shouldn't be working like this. Dollar's in leg B up. So you understand that when I talk about relationships, I'm saying that there is some kind of a relationship between gold and dollar. There is a relationship between crude oil and the dollar. But I believe that the that the stock market is in its own tide. And you have to look at it that way. And the only way that tide is going to change is if the volatility index breaks to the upside and really starts over a period of 3 out of 4 sessions, closes well above 20. It'll knock the market down 500 points in the Dow, 670 points in the S&P. So that's kind of the way I'm looking at it right now. But at this point, I have no signals to say that that's happening. We'll be back for the final section straight after this break. And any questions, folks, Basil Chapman at TFNN.com. Send them to me, and I always answer immediately.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. Just let me remind myself where I was. Yes, okay. A couple of things that I need to talk about. One is, at my, a week ago Wednesday evening, I had a free webinar, and all those who signed up were able to go to the archives, and there were specials that went on, and there was a question that I was asked in the webinar itself about the AUD-USD. That's the Australian dollar and the American dollar currency pair. And what I said, there's a pattern that I call the drop bug pattern. I'll start showing it next week on my CD introducing the ChapmanWave methodology, different chart patterns that you can recognize. And I said that it made a peak G back on the 8th of February at 1.084, pull back, and the question was asked, we were just about there, I think on the 27th, I can't remember what the date was, 29th I think it was, wasn't it? Yeah, the 29th. We were right there. And what I said is, this pattern says that with the technicals falling, that this fast-moving average, no, we weren't, I didn't do any moving averages at all. What I said, based on the chart pattern, if there are weaker technicals at this particular point, there's a good chance we're going to make a drop bucket pattern, and if it closes underneath the 9-period moving average for more than 2 days, there's a real good chance that we're going to retest the bottom, and that bottom is at 1.059. If you break the bottom, you can not only go down, you've got to be careful because you could get a 1-to-1 relationship to the downside. That was number one. The other thing is I had a question then about the USD JPY. And I said, no, this is the exact opposite. This is a really strong pattern. On the 29th, we were right there. And I said, no, this is lovely. Look at the way it's walking the 9-period moving average. Look at the way the MACD is so strong. Now it's producing this dolphin formation that goes to an M. I love that. And here's the stochastic. Now the stochastic said, whoops, be careful. You're a little bit weaker here. But look how it held the 9 EMA, and today it broke out. So this is not F. There's a much better chance. I got an F/B in the Chapman wave. There's a much greater chance. F. The dollar, Japanese yen, currency pair, the euro dollar, the dollar Japanese currency pair is working very strongly to the upside, and that's the first time you've got your leg B up in the weekly chart. It's trying to tackle the high of 8th of April at 85.52, and it's 82.56 right now. There's a good chance it's going to try to at least get there over a period of time. And the monthly chart, what I've shown was that downtrend line, this is the first time it's breaking out from the monthly downtrend line. So you can use this methodology in whatever tradable it is. You don't even need the technicals. You can do them with what I call the naked charts. Now, most importantly, and as we're almost close to wrapping up here, this is what I wanted to say. So there are all these different aspects to the market right now. We're looking at the ITB, the U.S. construction, as being really powerful. We're looking at, that's what it was, the USO. I was going to talk about the USO time price mesh. Look at that ITB. Oh, my God, what a beautiful move. That's the U.S. construction ETF, iShares. Now, in the weekly chart, I've got a left side, right side price time action, which is what the question was. No, there's no stalk leg yet. There was a stalk leg right there that you could call a stalk leg in the weekly chart. I don't want to go into it now. But what's very important is that this is the week that it should have gone back to the high of USO, which is the United States Oil Fund, back to 45.60. Well, it hasn't. So that says that it could take as long as to April, the week of the 6th of April, to get a 49.27 if it's going to break above the 200-period moving average. Folks, stay tuned. Nico DeHaan's coming up, then Dave White, and then Tom O'Brien, 4 to 6, and Dow's up 12,952. I want to see 13,000 and 70s to 90s next week by Tuesday. That'll be really positive. Breaking under 12,820 says, time out, be careful.
Are you looking